Welcome to Money Investment for All. Good morning. In this video, we will see what is CAGR. It is also called annualized return. CAGR is also known as annualized return. How to convert annualized return CAGR to actual return. Okay, in how much year it is doubled or it is tripled. Okay, if you know actual return, then only you can say that. Okay, now what is CAGR? It stands for the compound annual growth rate. Okay, compound annual growth rate, that is annualized growth rate with the compounding effect. How much it has grown annually, in average years. So it gives the annual rate at which your investment has grown. How much your investment has grown annually, okay, at the rate at which your investment has grown annually. It is also the measure of investors' annual growth rate over time with the effect of compounding. In bank, we don't have compounding effect. In stock market, stock investment, there is compounding effect. Okay, what is the formula to calculate the CAGR? This is the formula. In this formula, F equal to final value, that is the total amount you will get after investment, that is including your investment amount and profit. I, initial investment, how much you have initially invested, and year, period of investment, that is 5 years, 2 years or 3 years. Okay, F by I to the power 1 by year and whole this minus 1. Okay. In website, there are several CAGR calculator available. I have used ICICI Bank Direct CAGR calculator. Okay, how to calculate the CAGR? In the CAGR calculator, they ask to give you initial value. Okay, what is initial value? I invested, let us say, 1000 rupees, and then final value. This is the amount I got after profit, including profit, everything. Okay, how much period I have invested? 3 years. So this is the CAGR. It will calculate and give the CAGR. Okay. Okay, how annualized return is calculated? How CAGR is obtained? Okay, and how the CAGR return is converted into actual return. That is important, because in how much year it is doubled or tripled, we can easily know. Okay, let us see with a specific example. Consider I invested 1000 rupees, okay, in the first year. In the first year, I got profit 20% after market fluctuations, market rise and fall. Finally, at the end of the year, I got 20%. Okay, so the profit in the year 1 is rupees 200. So at the end of the year, my investment becomes 1200. Okay, now in the second year, this is the amount we are compounding here, and for this amount I get, at the end of the second year, I get 25% return. Therefore 25% of this is rupees 300, and at the end of second year, my investment amount has grown to 1500. Okay, now in the third year, similarly, at the end of the third year, the final amount, okay, final value is rupees 1950. Okay, now how annualized return is calculated. Okay, 20% in the first year, 25% in the second year, and 30% in the third year. So divided by 3 equal to 25%. So in the previous, I used ICICI direct CAGR calculator. Okay, and initial value I gave this, and the final value I gave this, and I got 24.93, that is 25%. Okay, now how do you calculate the actual return? Okay, so how it is calculated? This is the invested amount, and this is the final amount you get. Okay, 1950 into 100, that is 195, that is almost your investment is doubled in 3 years. So how important CAGR is, how useful it is, we'll see now. It is a useful tool for all investors in mutual fund or index fund or ELS fund or ETF fund. It is a very useful tool to compare the performances of different mid-cap fund, different investments, different mutual funds, how much CAGR they have given, Axis Bank, how much they have, SBI they have given, how much Fidelity has given. So we can compare the performance of different investments. It is also useful for comparing the growth of annual rate of growth of various funds. Thank you for watching. Please share and subscribe. Thank you again.